All right, let's talk about one of the wildest earnings reports of the quarter, KULR Technology Group. This is a company that put out numbers that sent its stock on an absolute roller coaster and honestly left a lot of us scratching our heads.
So, here's the central question we have to tackle. Was this a record profit or was it some kind of financial mirage? Because on the surface, KULR posted its first ever profitable quarter, a huge win. But once you start peeling back the layers, you find a story that is way more complex and, frankly, a lot more interesting.
So here's how we're going to break it all down. First, we'll look at that headline profit. Then, we'll dig into their wild Bitcoin strategy. Third, what products are they actually building? Fourth, we'll cover the tough questions investors asked. And finally, we'll give you our verdict on what to watch for next.
Okay, first things first. Let's look at the numbers that got everyone talking. They were definitely shocking, but maybe not in the way you'd think.
The big number everyone saw was this, 22 cents of profit per share. Now, you gotta understand, Wall Street was braced for a loss of 2 cents. So this wasn't just a beat, it was, well, a complete blowout, their first profitable quarter ever.
And on top of that, they posted record revenue of about $4 million. That's a 63% jump from this time last year. Seems amazing, right? But hold on a second. And this is the paradox at the heart of the entire quarter. Look at this. Their official, on-the-books net income, a positive $8.14 million. Awesome. But the money they lost from their actual business, making and selling stuff, that loss got bigger, landing at negative $9.45 million. So how in the world does that happen? How do you lose more money but report a huge profit?
Well, the answer has almost nothing to do with batteries or tech components. It has everything to do with a super bold, and some would say super risky, financial strategy involving Bitcoin.
Yeah, you heard that right. Management has pretty much reinvented the company. They're not just a tech company anymore. They call themselves a Bitcoin Plus Treasury company. They are using crypto as the financial engine for the whole operation. That profit we saw, it wasn't from sales. It was from the value of their Bitcoin holdings going up.
So how does this machine actually work? It's kind of like a three-step dance. First, they raise cash by selling new shares of their own stock on the open market. Step 2, they take that cash and go buy Bitcoin. Then step 3, that big beefed-up balance sheet, now full of Bitcoin, gives them the capital to fund all their ambitious and, for now, money-losing tech development.
And they are not messing around. We're talking over 1,000 Bitcoin in their digital wallet. You add that up with their cash, and suddenly they're sitting on a balance sheet worth about $140 million. That is a serious war chest.
So they've got this huge pile of cash in crypto. What are they spending it on? Well, it's fueling a massive pivot, a huge shift in what the company even is. They're moving from just being a services and component supplier to a full-on product company. You can really see the whole journey on this timeline. I mean, they started out making this super advanced carbon fiber tech for NASA and the military. Then they moved into a whole battery platform. And then, bam, they plug into the Bitcoin strategy, and suddenly that's funding things that sound like they're straight out of a sci-fi movie, like AI-powered exoskeletons. And look, this isn't just a bunch of ideas on a whiteboard. They have actual products. We're talking batteries waiting to get the final green light for NASA's Artemis moon mission. A battery that can, literally, get shot with an armor-piercing round and not explode. Another one for deep-sea missions that can handle insane pressure. And now they're selling these AI-powered exoskeletons for factory workers. This is some seriously cool, cutting-edge tech. But, as you can probably guess, a strategy this unconventional doesn't come without some major questions. And during the Q&A on the earnings call, you could feel the tension. Shareholders wanted answers. Yeah, investors went right for the jugular. This question really sums up the entire worry, doesn't it? Why should we stick with you when you're just selling more and more stock to buy Bitcoin and fund a business that's not even profitable? It's the classic dilution concern. Management's answer was pretty direct. They basically said, look, we had to do it. Selling those shares was the strategic tool we used to build this $140 million fortress on our balance sheet. You just can't compete in these high-tech fields without that kind of capital. All right, next up was the 1-for-8 reverse stock split. Now, a lot of investors see one of those and they immediately think the worst. That the company's in trouble and just trying to keep its stock from getting delisted. But the CEO came out swinging on this one. He used the word unequivocally, saying it had nothing to do with compliance issues. The whole point, he claimed, was strategic, to get the stock price higher to attract the big fish, the institutional investors, who often have rules against buying penny stocks. And finally, there was the elephant in the room, a really damaging report from a short seller, Grisly Research, that had come out a few months earlier, basically calling them out. So what was their response? Well, they pretty much took the high road. They said, look, we're not going to get into a public shouting match with short sellers. That's a distraction. Our job is to build the company, not to fight reports designed to sink our stock.
Okay, so after all of that, where does this leave us? You've got a profit that isn't from the business, a super risky funding model, but a product pipeline that looks incredibly promising. It's time for our final take.
When you lay it all out, it's just a perfect split. The bulls will point to that record revenue, that massive Bitcoin-backed balance sheet, and the amazing tech that's already getting nods from people like NASA. But the bears, well, they'll point right back at the growing losses from the actual business, the shrinking margins, the constant stock sales, and the fact that the so-called profit could disappear overnight if Bitcoin's price crashes.
So where do we land on this? For us, it has to be a market perform rating. It's really the definition of a high-risk, high-reward situation. The story is absolutely fascinating, and the upside could be huge, but the foundation it's all built on is just so unconventional and so risky that it could just as easily fall apart.
So in the end, it really all comes down to a race against time. Can KULR's amazing frontier tech start generating real, sustainable profits before its high-risk Bitcoin engine runs out of gas? That's the big question. The next few quarters are going to tell us if this was a stroke of strategic genius or a spectacular flameout. This is not financial advice.